What's up, everybody? It's John Barr with Prime Home Solutions, and it is time for our November Prime newsletter market update. Started this probably 2, 3 months ago, and just wanted to make this a reoccurring thing to make sure people that follow us at Prime are the most knowledgeable people in the industry here in San Antonio. So let's go ahead and get at it. So reviewing the numbers for October that was put out by Sabor, we had a little bit of drop in price as far as the average overall price goes, which is to be expected in the wintertime. We're just at over 240,000, which was just under a $2,000 price drop from last month, but was still as a 5% year-over-year increase. So anytime you see YOY, that's what it stands for. The median sales price dropped to $1,000, which is again to be expected, but we are still up 7.3 for the year. Now, total sales volume 2,400, which is an 8% increase year over year, down 208 from last month, to be expected once again. Average rental price is down to 1,371, which is just a 0.3% increase year over year, which has a little different than what we've been watching. We've been usually seeing in the single digits, not down to the tenths, as far as year-over-year increases with the rents. So, but we're a little down, nothing to really worry about though. So I want to plot this on the graph so you guys can kind of see what this looks like. There's the bottom of the real estate market. It was just around 2010, early 2011, and now we have seen a 5-year uptick. What is going to be curious to see is if we continue our trend like we're seeing or already doing. We're seeing a little bit of flatten out, not falling as steep. We should see a spike in December, which is kind of like what we're seeing here, and then prices increase again. Now keep in mind this is from the October data, so November is not in here yet either. So next month I would expect, if it holds true, to see another drop in the median sales price. Monthly rents, same ordeal. We can see the different humps from the different cycles over the years, and we can be expected rents are dropping overall. So if it holds true again, November it should still drop a little more, but in December we see a little spike before it drops to its low in January, and it picks back up into the springtime. Employment, unemployment rates. Now once again, this data is 2 months old. I don't always get the freshest stuff, just for the fact of when the Bureau of Labor Statistics puts their information out. Just over 1 million jobs, which is a 2.41% increase year over year. It is an increase of 6,800 jobs from the previous month, so that's good, but we are still below our all-time high that was set in May of this year by just under 1,500 jobs. Unemployment is a 4.06, which is a 0.04 decrease from previous month, so that's a good thing when the unemployment is dropping, so it's different than all the rest of the graphs. But a 2.23% increase year over year, so we're still not at the levels we were last year, but this is a third straight year over year increase since September of 2011. Now, we hit our all-time low unemployment of 16 years in April of this year, so we are still 0.67% higher than that. So we're not quite back up to levels, but we are gaining on that. Now you can take a look at our 20-year unemployment. Now we've seen an uptick again, so we did dip down a little bit, but now we are continuing to grow our local economy here, which isn't anything to really truly be worried about just yet, because you can see it happens all the way, but as long as it's on this continued trajectory going up, we're okay. We're doing fine. What I'm kind of just watching is these numbers and these employments to see, you can see the spread from the 2000 .com bubble to the real estate bubble, and like the length of time that we're about there, maybe another year or two to where we're going into untested waters. Here's the 20-year unemployment rate. So you can see that here was .com, here's the real estate bubble, and we've been trailing down, and we're down around the bottom. We're just kind of bouncing around down here, just like we've done in the past. So it's something we're going to continue to watch to see when do we see that unemployment continue to rise. Now, foreclosure numbers posted in December for the December auction, there was 517. Now this is only in Bexar County, and this was a 16% increase over the previous month. So we're seeing the banks really starting to push these foreclosures, drop in their inventory. What's causing that? I really don't know, but we are going to kind of continue to watch that as the months go forward. Harris County did jump over 500. The last month they were at 800, and now they're up to 1,300. So there's a lot of inventory, and that could be caused because about a year and a half, 2 years ago, that's when oil really dropped out. So now those people that might have lost their jobs and falling behind are still living in their houses, but now the bank is starting to foreclose on them since they're getting to that 18-month, 24 months behind. Sold at the November auction, there was 149 properties, which was a 67% increase from the previous month. So why that increased so much, we don't know, but that means that less and less people were successful in getting those postponements. So they're not as proving as many short sales, they're not as proving any bank mods, or people are just too far behind and the banks are really starting to flush out their books of the properties that are really far behind and they just need to go ahead and foreclose and take the houses back. Now, I like to add something from the Federal Reserve. This is from the Dallas Federal Reserve about different information. I mean, it's not consistent every month that they put out, but they put out different information in their monthly reports about our area here in San Antonio. And one thing I found interesting this time was the San Antonio Business Cycle Index. So basically what it does is the average economy grows about 3% here in San Antonio over the long-term growth. So now you can see about 2010, that was the bottom of real estate. That was the bottom of really the market cycle. And we've been kind of bounced around here. We really went up. We surpassed the higher than average growth. And we really hit that in about 2015 or 2014, 2015. We started trailing back down. And here of 2016, which kind of surprises me that prices of real estate are still going through the roof, but our economy isn't growing as fast. Now, like I said, we'll go back to this here. I've always been told in real estate it's about 3 to 5 year cycles. So now you can see 1, 2, 3, 4, 5 years of price increases. So we're at the top of that average threshold. And so that makes me kind of wonder if our economy is not growing as fast, but our real estate prices are still increasing, how long can we stay on that path before we see either a market correction where prices come down or they just kind of really flatten out and continue to go. One thing I said I was going to add this next month is the average sales price broken down by price range. Now, the average price I really don't like to use as far as the strength of market, just because $1 million homes, like you can see here, we had half the properties sold this last month and the month before, so that can really affect that average price as a whole. Even though we only dropped about $2,000 on our average home price, I don't like using it as just a strength of real estate market. I like to break it down a little further so we can kind of see certain things. And one thing that I like to look at here, especially for you flippers out there, this is really important because you can see that the property sold in the 200 to 250 range dropped by 21%, but the price change also came down by 0.17. But now you look at this 250 to 300 range, prices did drop, or the number of properties sold did drop, but the prices actually increased by 0.68%. So it tells you there's a little bit of shortage there. So even though there's not as many properties going up for sale and actually selling, the prices are going up. So that might be a market opportunity for people when they start looking at these properties that, hey, I fall in this price range. Maybe I can still push the ARV a little bit and recoup that because prices are increasing. Same thing with the 300 to 350. But San Antonio doesn't have a huge market for those two. So that, to me, it seems like there's more people coming in here that can afford those price ranges, and they are willing to push the sales prices up in those price ranges. So now, I mean, I wouldn't really trust this data too much. I just want to put it on here. This 500 to 1 million. There's not very many properties that sold, even though the prices went up by a significant margin. There's just not that many of them, and those properties, if you look at the days on market, are typically a lot higher than some of these other properties in the, let's see, the 150 to 300 range. So that's it for this market update. Next month, I'm hoping to add months of inventory to the side over here. So I have another column that shows the months of inventory per price range so that people can kind of see what's a month in inventory, because they say a stable market between buying and selling market is about 6 months, and the majority of Texas is under that. I think we're in the mid to low threes for as far as months of inventory. So we want to put those in here so when we can start tracking these things over time, I can show you guys saying, hey, we're seeing a month's inventory increase in our higher price range homes. So be a little cautious when you're trying to flip into those price ranges, because months of inventory are going up. That means not as many people are affording it, being able to afford it. And that's something that we want to watch, especially with this new administration coming in and a lot of pressure being put on the Federal Reserve to hike interest rates. So we can see how that's going to affect our real estate prices here in the US and specifically San Antonio and Texas. So I hope you guys enjoyed this. And if you guys have any questions, any comments, we are trying to build this, give you guys more information. If there's something you guys would like to see, definitely reach out to me at John@Prime Home Solutions, like you see here, and I'd be happy to have a conversation with you guys and put whatever information you would like to see in these market updates. So, all right, guys, happy investing, and we'll catch you next time.